Hello, how's it going? I'm Russ, and last March I started this little experiment using Joel Greenblatt's Magic Formula to pick 10 dividend stocks, and I completely forgot about it. So I just checked the results, and I'm pretty impressed actually, so I want to show you what happened. If I had put $100 into each of these 10 stocks, I'd have $1,160 a year later. That's a 16% return. And VOO, the Vanguard S&P 500 ETF, only made about 12%, so the Magic Formula actually beat the market. So who's Joel Greenblatt? I can hear some of you asking. He wrote a very cool book called The Little Book That Beats the Market, and I really think you should read it. It's a very easy and entertaining read. He's a legendary value investor who ran a hedge fund that averaged 40% annual returns for 10 years. And he wrote The Little Book That Beats the Market, where he breaks down his strategy for everyday regular people like you and I. Now you can get this all at magicformulainvesting.com, where you rank every stock by how cheap it is using earnings yield and how good the business is using return on capital. Then you buy the top ranked stocks. And you want companies in the top right corner, which are cheap prices but great businesses, high earnings yield, and a high return on capital. So here's how Joel Greenblatt emphasizes you should do this. You hold for exactly 1 year, then sell and buy the new top ranked stocks. Why? 2 reasons. First, it takes time for cheap stocks to get recognized by the market, and second is for tax strategy. You can harvest losses before the 1 year mark for short-term rates and take gains after a year for the more favorable long-term capital gains treatment. And Joel Greenblatt says if you just follow this mechanical system and don't get fancy with it, you should beat the market over time. No emotions, no second guessing, just buy the formula's picks and sell after a year. So last year when I ran this, I sorted by the default setting, which is looking for companies with a minimum market cap of $50 million. So I got some interesting picks, and I did, like he said, you're supposed to pick the companies that you understand or you think could do well, but they're on the list, and the more you pick, the more diversified you'll be. So I went with 10 dividend-paying stocks, and you got some interesting ones there. Nathan's Famous, Altria, Mueller Industries, like Build-A-Bear, Marine Products does boats, Playtika, you'll see them pop up again, Tapestry, Interpublic. So I hadn't ranked them by return on capital employed like you'll see I did this time, but I'm pretty surprised that it beat the market with a 16.08% total return, and all of them beat the S&P 500, which was a 12.13% return, except for 4 companies. Marine Products, minus 13.92% total return, that's with dividends received. Playtika, 31% down. Interpublic, ticker IPG, down 15.22%. And then the big loser, Wabash National Corp, which pretty much makes trailers and heavy machinery, but down almost 60%. So this time I'm being more systematic. I started with companies with a market cap of at least $1 billion, which I think they might be a little more stable than the $50 million minimum I used last time. And then from the Magic Formula's top picks, as you see on the screen, I found 31 that paid dividends, but I ranked them this time by their 5-year average return on capital employed and picked the 10 highest ones. So out of those, we got Merck, which is that big pharmaceutical company many of you know. Playtika, they make mobile games and they make money from people playing on their phones. Steve Madden with my new favorite ticker symbol, SHOO, which you won't believe it, they make shoes. Best Buy, ticker BBY. It's an electronics retailer. Bath & Body Works, candles and lotions, and they were spun off from Victoria's Secret. H&R Block, ticker HRB, they prepare taxes. Altria Group, cigarettes, tobacco, you know them. Garrett Motion, ticker GTX, they make turbochargers for cars, amongst other things. Buckle always surprises the heck out of me. They're still in business, ticker BKE, your mall clothing retailer. And then HP Inc., ticker HPQ. Yeah, the printer and computer company. Got a nice smattering of interesting and kind of boring companies, but hey, we'll see how they do. I threw them into a play portfolio here on Simply Safe Dividends, which remember, you can try it out free for 2 weeks. You just give them your email address, no credit card needed, no affiliate offer or anything from me. We'll see what this shakes out. I do have a spreadsheet that I'll be sharing with you in a moment here. You'll be able to track and see whenever your little heart desires, whenever you're watching this. But if we sort these by valuation, Bed Bath & Body Works is the considered most undervalued, but 3 of them, Garrett Motion, Playtika, and Steve Madden, they don't even have a valuation on those. So there you go. Some of you like to pause the screen, see some of the details on here. And for future reference, how this worked out, I put in 1 share, cost per share, as today's video price. So a year from now, we'll see what those did. But here's the cool part that you can follow along with. There is a link in the description below. And if I set it up right, it should automatically update to show you the difference and the percent change for each of these. And then a year from now, Memorial Day weekend 2026, I will go through and fill in the blanks and we'll see exactly what shook out and if any of these were able to beat the S&P 500 or as a group, if they were able to beat the S&P 500 on average. And if this does beat the S&P 500 by next year, I think that I actually might put some real money into this and do it for real, do $100 per company for 1 year and tax loss harvest the losers right before the year is up. And then the day or two after the year is completed, its cycle, we'll go ahead and sell those and see where things are at. Hey, I wanted to remind you that I have a free and fantabulous weekly newsletter that you can sign up for at dapperdividends.com or click the link below. Share some investing thoughts and insights, the portfolio moves, and some stocks about to go ex-dividend. And if you want to see the portfolio and when I buy stuff that day, you can follow me on Blossom. That's also free. I have a link below. And hey, if you sign up with that link, I get like $5 each time. So win-win for you and I, right? So let me know what you think of this experiment of Joel Greenblatt and his magic formula. Do you have any experience with it? Is this your first time hearing about it? Share with all of us in the comments below. We would love to hear it. And do you think you would ever do anything like this? Hey, did you know there's a new Berkshire ETF that's yielding almost 15%? Well, hey, in this floating little box next to my head, I did a video on it where I'm going to tell you exactly what I think about it and if you should consider investing in it. So click that floating little box next to my head and I'll see you and tell you all about it there.